Hey, it's 5th of November. Thanks for joining me. I'm Jason Sen, and I'm going to look at some dollar pairs, and this is the dollar index that I'm looking at. Now, I'm going to try and make sense of some of these markets, and right now the Forex markets are not making much sense at all. That's the truth. I've just finished a gold, silver, and WTI crude video. If you're interested in those, please have a look. Gold, silver, and crude look like they're going to absolutely rocket. The dollar index chart to me looks confusing because we're in a consolidation pattern. And they're always a little bit confusing, especially when they start out. In fact, you're probably going to have to redraw one or two of these trend lines. I think this is probably where I need to go with that trend line. So what can I decipher? This probably looks like a bull flag. In fact, this trend line I'm going to take off because I don't think that's really doing anything now. There we go. Those are the trend lines that are still working. My best guess is this is a bull flag. The dollar's just a little bit tired. We know that interest rates are going to keep going up, but the dollar has decided it's not going to keep reacting to the same news. Fair enough. That's the way markets work. But there's nothing telling me that the dollar's about to turn around and collapse. I don't see this as any sort of topping pattern. There's no double top. There's no head and shoulders. There's no particularly bearish candles. We had one bearish engulfing candle here telling us that the market had topped and that we would that to me telling me that we're probably going to trade sideways. I would have to see a very big pattern to tell me that the bull trend has reversed, and we're definitely not seeing that at the moment for the dollar. I'm not really sure why the dollar went down on Friday. To me, the employment number looked pretty strong. 261,000 jobs created, average earnings up. Okay, the unemployment rate went up from something like 3.5 to 3.7, but I don't really understand why the market focused on that particular number and didn't see the huge job gains and the big gains in average earnings. But anyway, it didn't. Can I see anything on the weekly chart that tells me that the market's that the dollar's going to reverse? No. Mildly negative candle there. Yes, this is a bullish engulfing candle. So we've got a series of two negative candles on the weekly chart. We saw some follow through with this red candle, but this week we pushed up and closed unchanged. Now, this is not a bullish candle. A shooting star. It's not at the top of this trend, but again, it just shows that when the dollar did push up, sellers came in, push the price down. We've got a small green bodied candle. Enough, we need a bit of a correction, and it has just started. Look at the weekly stochastics. We were overbought. We've been overbought through most of this year, so we do need a bit of a correction to the downside. Now, before when the stochastics have corrected, we've only got to maybe 1/3 or halfway down the scale, and we're getting close to that now. So again, I don't really think the dollar's about to plunge. Good support around the sort of 108. 109, 108.50 area if we were to drop a couple of hundred pips, but I don't see even that really on the cards at the moment. There is support down around 109.5 as well if we were to drop 100 and something pips, 130 pips. We've got the 100-day moving average creeping up towards that support level as well. Okay, I've made it clear. I think this is a consolidation pattern. Eventually we'll break higher, and when we do, we'll be trying to jump into a dollar long. That isn't on the cards at the moment. I guess we've got the midterm elections this week, so whether that influences the dollar or not, I don't know, but we'll soon find out, won't we? We'll have a chat about that next week. Right, let's have a look at a couple of dollar pairs. Starting with the euro, again, consolidation pattern looks pretty clear. I talked about this in the Telegram group, how this is probably a flag. It's a beautiful flag, really. It's just a perfect looking flag. So I don't need to tell you that I'm sure the euro has been in a bear trend against the US dollar for a long time. There we go, a really long time. Punctuated with some consolidation patterns. Blooming choppy, very, very choppy. Down we go. But look, more recently we have been accelerating to the downside. So we're clearly in a bear trend. Euro economy is going to get smoked this next year, isn't it? Okay. So bear flag, nice bounce off the lower trend line. As I said to you in the Telegram group on Friday, look, I think I did say this. Looks like we tried it. We closed above the trend line. We poked our noses below the little trend line there. But when I spoke to you on Friday, we had a tiny green candle just on Friday's open, and I said it looks like we could just push above the trend line, and that might be a false break. Well, I can't say that I expected such a big green candle to appear on the release of the non-farm payroll number, but hey, that's what happened. Now, I mean, crazy. I'm just going to say something about the markets. They're all over the place at the moment. Most things are all over the place at the moment. I've just done a video on gold and silver. Gold and silver went through the roof yesterday. No real particular reason why it should have done so on yesterday. We did have a triple bottom in gold, so have a look at the video. But to me, the markets feel like liquidity is just is drying up. I don't know what the volumes are like, and the volumes may not indicate the fact that the liquidity is drying up. You know, you can still have high volumes, but not a lot of liquidity for trading during the day. But because we're getting such big moves, you're still getting a lot of volume. Does that make any sense? If it doesn't, I'll explain more if you put a comment down in the comments box. But we're getting a lot of volatility on really not a lot of news. So it does indicate to me that we are seeing liquidity dry up a little bit, which isn't a surprise. We had the Fed meeting this week. We had the Bank of England meeting, US unemployment number. We've got the midterm elections on Tuesday. I think we've got the CPI number coming out of the US on Thursday. With so much going on, it's not a surprise to see traders backing off and easing up on the positions. So maybe that's why we have a liquidity issue right now, and what with the crazy volatility and everything going on anyway. Okay, so where am I? Back to the euro. We've broken above a trend line which goes back to March. So that's a really nice break and surprising, really. Of course, what do we get on Friday? We had a 225 pip move. That's absolutely... it's a big one, just on a relatively on an unemployment number that wasn't that far out of line. I don't really understand why the dollar collapsed, but anyway, there we go. So we're pushing back up to the to test the high from Wednesday, 99.75. We closed just below that, 99.66. I wouldn't want to bet against the euro. I think it looks like we're going to continue higher next week. Test the 100-day moving average at 151. That was where we peaked the last time. That was a high in October. So that will be key for this week. And I will continue to look at the analysis on that after, if we've tested that. So I'm just going to leave that right there. But at the moment, it does look quite bullish. Obviously, if we do start breaking above the 100-day moving average, which is at 10050, that's going to look pretty bullish for the rest of the week. You look at cable, which has been all over the place. Not a surprise, really, when you consider the political situation in the UK. Anyway, can I make sense of this? Not really. It doesn't look particularly bullish. The euro versus the US dollar in the short term does look quite bullish, as I've said. So probably a consolidation pattern in the bear trend. Obviously, the pound, well, if you really want to see how shocking the pound has behaved in recent... It's not, the pound has not just done badly in recent days or weeks after, with that whole Liz Truss catastrophe. The pound has really been plummeting for a very, very long time. So back in, where are we? 1972, the pound was trading at $2.61, and we're now trading at $1.13. So that just gives you a little bit of a perspective. Okay, so on the weekly chart, it really just looks like a bounce in a bear trend, which didn't last too long because we came down last week. Despite the 75 basis points interest rate hike from the Bank of England. Okay, so it's a little bit confusing. Again, markets are choppy all over the place, not really predictable direction-wise from day to day. Big red candle on Thursday on the rate hike, big green candle on Friday, even though the US had a strong employment number. Make any sense to you? No, it doesn't really make any sense to me either. Okay, so I'm just going to leave cable. I can't really talk a lot of sense about that one. How the dollar index is in some sort of consolidation, and how the euro versus the US dollar is in some sort of consolidation. Well, a bear flag, to give it a name. And this is the Aussie dollar versus the US dollar. And look, this is the same kind of thing. I don't like consolidation patterns. I find them hard to trade because you don't even know what the parameters are for the consolidation pattern when it starts. You have to give it, well, a month really before you even start getting some trend lines to trade. So we've got that. We've got the month where we've got the trend lines to trade, but they're quite erratic. These are the trend lines that I've got. If we start, we've got resistance at around 65.20, 65.30. If we break above there, then I can talk about a more sustained recovery. But right now that looks pretty messy. Dollar Canadian. Now we've got a pattern. We have got a pattern, and I'm not quite sure how to take this, but I can't ignore it. We've had a good run up in the dollar versus US dollar versus Canadian dollar. We've got a left shoulder ahead. We've got a right shoulder. I've talked about this in the report all week about we could be forming a head and shoulders pattern. I did not expect to see this red candle on Friday. 300 pips the US dollar fell against the Canadian dollar. Well, almost, all bar 18 pips. 137.50 down to 134.68. according to my maths at least, that is nearly 300 pips. Now, broke the trend line. Going back to here, what month is this? March. So we broke that multi-month trend line, which had held so well. Look at these green candles with the long lower wicks bouncing off there really nicely and absolutely plunged through it. 300 pips on what? On what? A US unemployment number that was quite strong. I just don't get it. The markets are really tough at the moment. As I said before, liquidity drying up, I think. Right, now this is probably the neckline to the head and shoulders, if you believe it is a head and shoulders pattern, and I think it is. I think it is a tradable pattern. Now, the trend line comes in at 134.90. We close at 134.78. So we close below the trend line. We close below the 50-day moving average, which is at around 135.00. Looks pretty negative to me. What else can I say? You know, we might hover around that 134.90, 135.00 area. These are not always that easy to trade. And with a head and shoulders pattern as well, you often break and then retest the trend line, the neckline, and then dump. So just be aware of that. Anyway, look, I'll obviously be posting my comments on the daily analysis and in the Telegram group, but just wanted to make you aware of that. Had a tradable pattern on the New Zealand dollar, which took a while to actually work, but here it is. I've been talking about it for ages. Inverse head and shoulders pattern. So there's the left shoulder, there's the head, there's the right shoulder, there's the neckline. That was confusing on Thursday. Well, I know a lot of you had traded this pattern, bought it on the neckline. I know I got some good feedback from my subscribers on that one. And then you took the profit on this move up because it hit my targets and you got out. Thank goodness you got out, because we then confusingly retested the trend line, but went way below it, way below the neckline. The neckline was at, what was it now? 50, hang on. Trend line 57.80, we got down to 57.38. So it's 42 pips below the neckline. I thought it had failed, if I'm honest. But we rocketed from there on Friday. Okay, where does that leave us? Well, the head and shoulders pattern is definitely still intact and working. 55.10 up to 57.90. I'm going to call that, well, it's nearly 300 pips, isn't it? 280 pips. So we really should eventually go 280 pips higher from 57.58. Well, we've certainly done 200. We've certainly done 150 pips of that already, haven't we? So it looks like the New Zealand dollar can continue higher in the short term against the US dollar. So this correction for the US dollar can continue. 60.00 looks like a reasonable target for this week. 100-day moving average at 60.39. So I'll revise my thoughts on that, of course, during the week in the reports and in the Telegram group when and if we get up there, if I'm right. Okay, I'm going to leave it there for the dollar pairs. Hope that makes some sense. As I say, it's choppy, volatile, and just be careful if you're trading, because obviously midterm elections and then CPI number on Thursday. After that, maybe we'll have a clear run for 2 or 3 weeks where we can sort of trade without some mad fundamental stuff going on. But I think we are in for a period of tight liquidity and volatile markets. So be careful. I would suggest you keep your size down so you don't get caught out and wipe out your account in this period before Christmas. No one wants to wipe their account out at any time of year, but I'm sure you don't want to wipe it out before Christmas. Okay, please like, share and subscribe, and I want to hear all your comments in the comments box below.